Today on the We Invested podcast, we have Melissa Widner, and she is the Chief Executive Officer of Lighter Capital. Melissa, how are you doing today?
I'm great. Thank you, Wesley. Thanks for having me.
Absolutely, absolutely. And before we get started, would you mind letting the people know how they can find you on the internet? Whether it's your website or social media.
Yeah, so Lighter Capital is lightercapital.com. I reach out to me on LinkedIn. It's Melissa Widner, Widner.
Awesome. So let's just jump right in and start from the top and talk a little bit about, where you're from and where you grew up.
Okay. Well, I am from the US. I'm living in Australia most of the year right now. But I'm from the US and most recently Seattle. I would consider Seattle my hometown.
Awesome. And so how did growing up on the West Coast and in the Pacific Northwest impact your outlook on life and success?
Well, from a tech company standpoint, I saw Microsoft. I moved to Seattle. I lived in Seattle during most of the 90s, but I saw Microsoft really change the landscape there. So, and now, of course, Amazon, then Amazon came along. So I was surrounded by tech people. And, I think two of the three largest tech companies in the world are in Seattle. So you have a lot of exposure to um, not just big tech, but Microsoft created a lot of really wealthy people who went on to start companies and fund companies. So there was a very vibrant entrepreneurial community in Seattle.
Absolutely, absolutely. And so, you mentioned that you're living in Australia now for most of the year. How has that transition been for you moving from the States to now overseas and living in an entirely different culture?
Well, I came to Australia in 2009 with an Australian husband, but still maintained a foot in the US. And the cultures are actually quite similar, but I would say from a startup standpoint, there was not much going on in Australia in 2009, but that has changed dramatically. There are now probably over 100 venture funds where I think in 2009 there were three, literally
Wow.
three that had money to invest.
Wow. So, I mean, and just speaking of startups and, just having that entrepreneurial mindset and being in that type of culture and environment, I want to ask you about the current company that you've grown and expanded. So I want to ask, what is Lighter Capital?
So Lighter Capital is the pioneer and leader in revenue-based financing for B2B SaaS companies. So we provide funding to B2B SaaS companies with mostly B2B SaaS, any company with recurring revenue, and we provide it in a non-dilutive way. So it's different than a venture investment or an angel investment where you are selling part of your company and oftentimes some control as well. We are a loan, and the payback on the loan is based on revenue. The amount that's paid back every month is based on the revenue of the company until the loan is paid off. So the time it takes to pay off the loan will vary depending on how quickly the company grows.
Absolutely. I mean, and how did you get started in this industry?
So I was not the founder of Lighter Capital. I used to be the managing partner at National Australia Bank's venture fund. So I was in venture for quite a while. And in 2018, National Australia Bank Ventures, along with Silicon Valley Bank, invested in Lighter Capital, and I went on their board. And then in 2020, I became the CEO.
And that's incredible. And it must have been like, I can imagine that journey was not an easy one.
Well, I had run two companies before. So on the operating side, I had that experience before, but you're right in that it wasn't an easy one because it was in 2020 when the pandemic was new and there was a lot of rebuilding and there was just a lot of uncertainty in the market at the time. So you're right, that wasn't an easy one, but Lighter just finished its best year in the company's history in 2022. So
That's incredible. I mean, and how would you define, this software and this technology that your company focuses on investing in? How would you define SaaS?
Uh, well, software as a service, we are really looking for, we say B2B SaaS, but we do have companies that are B2C, especially if there's a subscription nature. We fund companies that have other forms of recurring revenue, but it's primarily, I'd say over 90% of the funding rounds that we've done over 1,000 financing rounds since we've been in business, are to B2B SaaS companies. And we don't have a specific vertical. We have funded everything from ed tech to prop tech to health tech. So it's more just, being able to predict because we get paid back based on revenue. It's our underwriting, which is the what we use to make credit decisions, is based on what we think the company's revenue will be.
Absolutely. I mean, it just, you know, speaking on, the types of companies that you guys fund and the type of companies that you guys look to invest in, what are some of the requirements that you like to see in, a certain company before you guys decide to invest in that company?
Yeah, so the minimum requirement is that the company has 200,000 in ARR, and we look for low customer concentration. So even if a company has a couple million in ARR, if it's from one customer, we wouldn't fund it because there's just too much, customer concentration risk. We look for companies that have been in business for at least a year, and have had revenue for at least 6 months. And we're looking for low churn, although sometimes with early stage companies or very early stage companies, you don't know what the churn is yet. So, but those are the minimum criteria.
Absolutely. I mean, and you hear all the time about different startups and different companies able to raise, millions of dollars, and it looks really luxurious and glamorous to be able to have these huge seed rounds. Um, but every company is not able to obtain these type of funds or raise this type of capital. So what options do founders have when seeking funding?
Yeah, it's a really good point, Wesley, because most of what we read about and most of what's celebrated are these massive venture rounds. But we know that, venture capital funds around 1% of tech companies. So it's really a small percentage of companies that fit into that sort of venture backable mold. And that's that, growth at, not as much today as it was a year ago, but that growth at all costs, that, going for something really big versus growing a company, with profits, or growing a company that can grow profitably. So Lighter Capital was actually founded back in 2009, 2010, based on an unpublished research paper by a Harvard Business School professor who said, there other alternative forms of funding, that VCs fund a very small percentage of tech companies, and banks won't lend to these companies. Banks aren't going to lend to in general, banks aren't going to lend to companies that aren't profitable, that don't have hard assets, where the founders aren't giving personal guarantees. So, the vast majority of tech companies were forced to either, rely on friends and family for growth, or just grow from revenue, which can be a lot slower haul than growing when you have some investment capital.
Absolutely. Absolutely. So what would you say are some of the advantages and disadvantages of different types of funding sources?
So that's a really good question too. So you should always take debt over equity,
Mhm.
unless, I mean, if you're looking for growth capital, let's say you want growth capital, you want $1 million, because if you get $1 million, you can double or triple your sales, or invest in some more tech or whatever. But you've decided you want to take some capital because you can deploy it for growth, and you have a choice. You can get $1 million in equity or $1 million in debt. You should always take it in debt, unless you are going to get so much more from that equity investment than money. So if the equity investment is coming with, maybe it's a strategic partner, like when I was at National Australia Bank, maybe it's, you're getting, not only are you getting the $1 million from NAB, but you're also, maybe getting a new customer, or you're getting a venture capitalist to come on your board that is going to be so game changing that it's going to be worth the 20% of the company you gave away. So in that case, equity might be the better decision because maybe it will fuel a lot more growth. And then you also shouldn't take debt if it's going to potentially be crippling for the company, where the servicing of the debt could put the company at risk. So the nice thing about our product on the revenue-based financing side, for the 3 years that most of our companies take it for 3 years, the monthly payments are based on a percentage. It's a small percentage of their cash collections. So, if they have a month where there's low cash collections, then they don't have a big revenue. I mean, they don't have a big loan payment to make. If their revenues fall off a cliff, which we did see happen with some companies in COVID, we had a company in the ticketing space, and their business model was they got a clip of the ticket for events. You can imagine what happened to their revenues when COVID hit. They went down 90%, but now they're back again. But the nice thing for them is their revenues dropped 90%, but their loan obligation on a monthly basis also dropped 90% because it was based on cash collected revenue. So they were able to pull back their expenses, ride out the pandemic, and didn't have this, heavy loan burden to service.
Wow, that's incredible. I mean, so it sounds like lighter capital really provides flexibility as well as peace of mind to its clients, to its borrowers.
Absolutely. On the revenue-based financing side, it's absolutely tied to cash collected revenues. And we also have a standard term loan. Some of our larger borrowers opt for the standard term loan, which is a fixed amount every month.
So, what does it mean to bootstrap your business, and why are founders choosing to take this route or take this path?
Well, there's a couple reasons. I mean, a lot of times they choose to take that path because it's the only one available. So bootstrapping means, they're not taking external capital. Although we will see today, more and more companies that have taken small angel rounds will still sort of be considered that in the bootstrap category. But it could mean you have to grow at a slower pace if you don't have access to external capital. If for example, that every salesperson you hire is going to yield 500,000 in sales, why wouldn't you hire 10 of them? Typically it's because you don't have the cash to hire 10 of them.
Absolutely. So, what would you tell a founder who is seeking to bootstrap their business?
Well, I think it's really would be dependent on the business itself. Some businesses, especially if you think about like in life sciences, bootstrapping isn't often an option unless the founder is really wealthy, because there's a lot of investment before you see your first dime of revenue. So it's would be very much dependent on the situation. We have one of our clients who's she's grown her company at a great rate. She bootstrapped it all the way until recently, when she took some non-dilutive capital from us. But she bootstrapped it from $1 million. She bootstrapped it from scratch, never took on any equity or debt, to 3 million in revenue, and then took a little bit of non-dilutive funding, and is now past 5 million and never had to sell any equity.
Wow. I mean, that is really incredible. And I think just being able to hear your story and being able to learn a little bit about your history, you have an extremely rich history in a background in finance, coming from Seattle, which is known as, one of the major tech hubs in the States, in America, in the world. You've also worked at National Australia Bank, which is something that is, very cool to me. And personally interesting. So what would you say are some of the lessons or some of the things that you've learned and transfer over into, being a CEO now that you gained from your past experiences?
Yeah, well, I was the CEO of two companies before I went into venture that both had successful exits. And I would say at that time, I probably didn't know a lot. I was pretty young in terms of running companies. Even though they had successful exits, I didn't know a lot about running companies. But as a venture capitalist, you get to work with a lot of different CEOs, and you get to see a lot of different CEOs close up, and you get to see, good management styles, bad management styles. So I think that it's actually a great learning ground. I think because you get to see, not just one company. You think about a normal career, you're going to work in, one, two, three, four companies, but in venture you might see, 20 or 30 companies. So you get to, you get a much broader data set.
Absolutely. I mean, and you're in these industries, from finance and venture capitalists to, as well as in the tech industry, which are all male dominated fields and male dominated industries. So, you know, it, I really feel like you're a pioneer in this space and a pioneer in everything that you're doing. Have you noticed any biases being a woman in these male led industries?
Well, I mean, I can't really point to, um, you know, an obvious example, right? But I mean, for me personally, but I've just watched the numbers, and the numbers are getting better. Finally, there's still a long ways to go, but a very small percentage of funding goes to women founded or co-founded companies. Although in terms of the overall numbers of companies that are run or that are founded or co-founded by women that are getting funding, that's gone up tremendously. We're still not seeing the big dollars, but a lot of that has to do with the big rounds are going to later stage companies, which oftentimes are run by men. But we've seen a big change there. And I'm also the co-founder and chair of an organization in Australia called Heads Over Heels that supports women entrepreneurs running high growth companies. And when we founded that company in 2010, the world was really a different place. We were struggling to find, high growth female entrepreneurs to support, and now there's so many people, and part of it is just that entrepreneurship has proliferated in Australia so much in the past decade, but also women, uh, you know, not, I don't want to say starting companies, because women have always been pretty entrepreneurial. And when you look at the stats, when you look at business stats, they start as many companies as men. It's just they're not growing them to the same extent. But we're seeing a lot more. We're seeing it a lot more often where women are starting companies with high growth in mind. And one thing we see in Australia is a lot of venture funds will report on the number of companies in their portfolio that are that they've invested in that have female founders or co-founders. And if they don't have them, they're looking for them. They're looking to have those. So that's new. That wasn't something that was really happening at all 10 years ago. So I think what we all know is that when you start to measure things, that can often be a catalyst for change.
Absolutely. I mean, and you kind of leading the charge on that change and being a part of it and getting the chance to see it firsthand and see that transition. How does that feel for you to be a part of it and to witness it at the same time?
Well, it's been slow, so that part is frustrating, but it's been it's been a conversation topic for about a decade now, which is nice. When it became kind of a hot topic, I think it was really when Sheryl Sandberg published Lean In that everybody started talking about this and thinking about it, um and it stayed. It has stayed so far as it. I thought it would, maybe pass in a couple of years and we'd be back to business as usual. But surprisingly and thankfully, that hasn't happened. And what I think what's nice to see is what's great to see is we're seeing venture funds now have women in them. Where that was when I went into venture in 2000, it was very rare. And even if you go back 5 or 6 years ago, some of the big funds had no women in the investment roles. They had women in assistant roles and finance roles and operating roles, but none in the investing roles. And now you don't, you'd be hard pressed to find a large venture fund that doesn't have women there. They're not always at the senior partner level, but given it's women are relatively new entrants to the venture industry, we should see that change in the next 5 years.
That's incredible. And something interesting that you mentioned too is that you were the CEO at two companies prior to this. You started organizations. You've worked with different CEOs and different founders and different business owners. So you've got to see a lot of different management styles and picked up on things that you like, and wanted to implement yourself. Um, so my question is, how did you focus on gaining your business acumen and gaining your business IQ? Um, I see that experience is one part, but did you use podcast, books, mentorships? How did you focus on gaining that knowledge?
Well, I think experience is, the most important. I went to Stanford Business School, and that was great, and it was especially good to go to after running a business. I ran an industrial supply business before I went there, but I do read. I read a lot, and we do a podcast. Lighter Capital hosts a podcast, and I was interviewing one of our customers yesterday, and she said something that was really interesting. She's a big reader also, that she consumes books in both audio and reading, and she said they will be absorbed differently when she's depending on the medium. And I'm not a big audiobook person, but I thought maybe I should try it after that.
Absolutely. And so, you just mentioned the Lighter Capital podcast, which I think is incredible. I'm a huge fan of podcasts myself.
Yeah, we have
What
to
are
listen to ours. We just started it a few months ago.
That's incredible. What would you say are some of the benefits that you've seen since you started your podcast and had the chance to interview different people? What are some of the benefits?
Well, I mean, I hope the benefits for me are, it's just great to have a deeper conversation with some of our customers, and we get to dig into some really interesting topics, not just how they started their business, but just their personal journey. But I hope the benefits will be for others that can listen to the journeys of these entrepreneurs, and most of these are bootstrapped entrepreneurs, and get ideas for how to run, how to start a business and how to run a business.
That's incredible. That's a really I haven't heard that model before, and I have not come across a company that interviews its customers, but I think it's a really genius idea to get customer feedback, to build tighter bonds and connections with your customers, and just display how cool your clients are. So I think that's awesome, man. How did you come up with that concept and that idea?
Well, we do have really cool clients, and I think uh, entrepreneurs are the most fascinating people on the planet. So, listening to their stories that are so varied, and entrepreneurs are so different. I think a lot of people, there's a lot of myths about entrepreneurs that aren't true when you look at the data. But so it wasn't a hard idea to come up with. I think there's a lot of people out there interviewing entrepreneurs and listening to their origin stories.
No, that's awesome, and I think that's a really interesting concept, and it shows a different level of care and attention, and you can get feedback really quickly, like in real time. So I think that's awesome. A lot of companies
Yeah.
have to send out surveys or send out emails to their clients to see what they like, what's working, what would you like to see. But you guys are talking to them and building those real face-to-face relationships. I think that's really interesting, and I like that idea for
Yeah,
sure.
and we hope we're also helping them with promotion. A lot of these are small companies that don't have big marketing teams. So we're giving them some tools they can use to promote themselves and their companies.
Absolutely. Absolutely. So before we started recording, we were having a brief conversation. And you could tell that I was from the South, because you have team members who are from the South and you've worked with different people, and you travel all over. So I want to ask, what is the importance of having a good team, and how did you focus on building your team and making sure you had the right people around you?
Well, team is everything. There's just team, and I think it's culture is everything. Company culture is everything. And if you have a good company culture, you will attract good team members. And um, we focus on making sure people are taken care of. And um, I don't. It's pretty simple, but it's about. I'll give you a couple examples. So when I came into Lighter Capital, the policy, the vacation policy, which a lot of tech startups have, is unlimited vacation. That's their policy. But I found out that while this unlimited vacation policy exists, people didn't take vacations very often. And when they did take vacations, they didn't completely turn off. I think that's been one of the benefits of living in Australia. In Australia, people take their vacations seriously compared to Americans. But so we implemented something, a policy that said if they take a week, when hopefully people are taking 4 weeks at least, but if they take a week and they turn off and they don't answer email, they don't respond to email, then they'll get a $500 bonus.
Oh,
But if
wow.
they respond to email, no bonus. So we're really saying, we want people to shut down
Absolutely.
or
And I
shut
think
down from work, go do something else. And we
absolutely.
know, I know that you're happier, you're healthier, you're more productive. It's better for our team and it's better for the company.
Exactly. Once you're able to take a step back, you come back and you feel energized and recharged and more creative. What America has a very heavy hustle culture. And it sounds like the culture in Australia is a little bit different. They focus on taking time off and enjoying their vacation and having that work life balance in. Was it difficult to merge the two cultures together?
Uh, no, not really. No, I mean, we have 16 members in Australia, so it's still primarily US focused company.
Hmm.
Or primarily most of this team members are in the US. But no, no, I wouldn't say that.
Absolutely. Um, you know, Trying to find a successful company can be like finding a needle in a haystack. Um, I can only imagine that there are certain risks involved when you're lending to companies, um, maybe certain default risks or even liquidity risks, whatever the case may be on making those repayments. So, with that being said, I want to ask, what are some roadblocks or lessons that you've learned throughout your career and throughout your tenure as the chief executive officer of Lighter Capital
Specifically on the risk side,
in general?
um, roadblocks. Well, I think the biggest, let's see, one of the biggest challenges when there's a lot of noise in the market, like there has been in the last few years, and we've been in a market for a really long time, is to just keep focusing on your business, focusing on building the business and focusing on the customer and not focusing on the noise that's out there. Um, there I'd say that that's a challenge when in a market like we had, in the last few years. Now things have come back down to market, and we're seeing, some fallout from companies that were more about the hype than, more about the sizzle than the sausage. So that's something, is just keeping, sort of keeping the whole team focused on, what we're doing. We're here to help these companies grow with not just money, but beyond the money, and we do that really well. I've never been involved in a company whose customers love them this much, which is one of the reasons I jumped into the role. Lighter's got a long history of doing this, and just making sure we continue to focus on that.
Absolutely. So at this point in your career, how do you define success?
Having a positive impact on the world, which is the world is your family, your friends, your team members, your customers, your partners.
Absolutely. And how would you like for people to remember you, as well as this company that you've built and grown?
Well, I think it'd be nice to. I haven't even thought about that really. Hopefully, it's a ways off for that. But I think the most important thing is that your family has fond memories of you, right? Because if that's not the case, then nothing else you did in your life really matters.
Absolutely. And so, what does the future of lighter capital look like to you?
So one, keep doing what we're doing and we do so well, which is help entrepreneurs grow their companies and realize their dreams on their terms. That is our core mission. It's how we begin every meeting that we have. We remind ourselves of our mission statement, and bringing other value to our customers beyond the money, which is the main thing that they are typically seeking to grow their businesses. But with over 500 companies funded and over 1,000 rounds of capital, we've got a great network that we've built of entrepreneurs who are happy to share their learnings with others and to get learnings from others. So it's really building that out. And
Absolutely.
if we can help our companies, it helps us, it helps them. So it's very much a win-win.
Absolutely. Melissa, thank you so much for your time today. I've enjoyed getting a
Thank you,
chance to
Wesley. It
talk to
was a
you and pick your
pleasure.
brain.
Yeah, thank
Absolutely.
you.